MotivHealth has an interesting backstory. The story of MotivHealth began 20 years ago when two friends were having a conversation about the rising cost of health insurance premiums. Even back then, insurance premiums were rising at unsustainable rates. Their conversation went a little like this. You know, if you gave someone a credit card and told them to go to the store and buy everything they needed and it would only cost $25, they'd probably buy many things that they didn't actually need and they wouldn't even know or care about what the cost of what they bought. But if you gave them a credit card with $1,200 on it, told them that they could go buy everything that they needed, but whatever they didn't spend, they could keep, they'd probably come back with only the things that they needed, and they would have cared a lot about the cost of what they bought. It kind of goes to Milton Friedman's famous quote, "Nobody spends somebody else's money as wisely as he spends his own," close quote. Then that conversation turned to life insurance. The question was asked about the two tallest buildings in Boston and what those companies sold. For those who have been to Boston, you know that the two tallest buildings are the John Hancock Building and the Prudential Tower, both of which sell life insurance. So if you're considering buying life insurance, most financial planners will tell you that you're better off buying a term policy and taking the premium savings to invest in yourself. That way you're covered for a catastrophic event, but you're able to take that money that would have gone into the life insurance company and manage it yourself, leaving you with more money over time. So that led to the conversation about why health insurance isn't viewed that same way. If everyone had money in an account, an HSA, that came from the money that they saved in insurance premiums while still being protected against a catastrophic event or multiple smaller medical expenses, they would start to care a lot about how much things cost, and they'd probably make better decisions when it came to their health. But just as important, they could start building up savings that would not only pay for current medical expenses, the unused money would roll over year after year, and they would actually provide a plan to pay for health care through their retirement. Here's an interesting fact. Approximately 70% of people spend less than $700 a year on medical expenses. Did you know that? For those who have large medical expenses, they're still covered by insurance and they end up paying about the same as they would in any other plan. So this MotivHealth conversation led to starting a health insurance company that focused on offering HSA-based plans with the goal of enabling consumerism in healthcare. This would lead to lower claims costs, resulting in lower premiums that ultimately puts more money back into the pockets of everyday employees. In fact, the industry average for companies with healthcare is an 8% increase per year over the last 3 years. And yet at MotivHealth, our average is 0, meaning our percentage increase does not rise at all. We're excited to say that we've been doing this successfully for hundreds of companies since January 2016. Welcome to MotivHealth.